So here we are to understand that if you're selling gold in the financial year 25-26, then how can you save on income tax, which is a very important thing for many of us. Recently, we have seen that the gold prices touched nearly the 1 lakh mark, and many people said, okay, now we should book the profits because we don't know how the future is there for this particular gold market, whether it will go up, whether it will go down. So we are not sure. Let's just sell it off, clear off our asset, and maybe we can later on again invest it somewhere else. So this was the mindset, and so many people sold it away. But yes, this lady says, wait, I'm going to collect tax on it now. So everybody is now worried that okay, we have already sold the gold, now what to do? The finance minister is there and she has told that okay, you're going to have gains on if you have gains on the sale of capital assets, then I'm going to take some tax out of it. If it is short term and even if it is long term, I'm going to collect the taxes. So it is essential for us to understand now that how can we actually plan the tax, right? We are not evading tax, we are actually doing tax planning in a very legal, ethical manner, so that our taxes on the gold that we had actually sold out or we are planning to sell in this year can actually save on the income tax. There are a few things that we need to understand in this entire video. You should pay careful attention to each and every slide and each and every part of this video, because I'm going to explain in detail to you about the gold sales, the various things that you have to keep in mind so that you get the exemption. So first important thing, let us understand that what is the classification of gold. Now, gold is basically classified as a capital asset. Now, whatever the profit has been earned on this sale of gold will be taxed under the head of capital gains, because gold is classified as capital asset. And depending on the period of holding, you will be charged the taxes. So holding period will be the date from the purchase to the sale, right, of that asset. So if you have purchased gold on, let's say, 1st of April 2022 and you're selling it on 1st of April 2025, then your holding period will be considered to be as 3 years. So this is an example just to understand the concept of holding period. Now, if your holding period is comprised of short-term capital gains tax, it is when the gold is sold within 24 months of acquiring it. So this will be basically the short term. Then coming to long-term capital gains tax, if holding period is more than 24 months, you have to pay long-term capital gains tax. Now, how much? If it is short term, then profit will be added to your regular income and it will be taxed in accordance with your tax slabs, whatever it may be. So that means it is not taxed at a special rate, but it is taxed in the regular income. However, if it is long term, now it will be considered as a special rate of, you can say, the taxes. And so whatever the profit you earn on long term capital gains tax, that profit will be taxed at the rate of 12.5%, right? So the profit, the gain that has happened on the sale of gold will be taxed at 12.5% if your holding period is more than 2 years. Now remember, if at all the exemption, that whatever is the exemption, old regime, new regime, whatever you have chosen, the basic exemption of taxes, that will be something which can be excluded, and over and above that, whatever is the amount that will be charged as gains. So just in case you have no other income but the gain on the gold sold, then let's say under the new regime, your basic exemption will be 4 lakh rupees. Now, if you have to claim the section 54F exemption, then what? Then there is a process. Okay, remember, each step of this process is very, very important. If you miss out on this, if you don't understand even one single line in this and you make a mistake, then you may be charged a higher rate of tax. Not just that, you will have to face interest, penalties and all under the income tax. So be careful. Try and understand each and every step carefully. So first thing that you need to understand after you have sold the gold, so first step is the sell gold. So once the gold is sold, next step is check on the eligibility, whether you're eligible to claim the section 54 F exemption or not. That you need to check. So I'll be telling you about the eligibility later part of this video. Now, next step, to save on the tax, you will need to invest, right? Invest and hold this particular amount in property. Now, what kind of property? How long do I need to hold? How much do I have to invest? All these questions, don't worry, I'm going to tell you in the next part. And finally, if at all there are any unutilized funds, you have decided to invest, but there are some unutilized funds, then these need to be deposited in the specified schemes. Now, what are these schemes? Where do I have to deposit? I will be telling you. Don't worry. Now, coming to the eligibility part of this process. Okay, so first you have sold the gold. Now you need to understand whether you're eligible for claiming of the exemption or not. So remember, your individuals and HUFs are the ones who will be allowed to get the exemption or claim the exemption. And the holding period, whatever is the holding period of the gold, should be more than 24 months. So 2 years basically. So above 2 years, if you're holding the gold, then you're eligible for this 54F exemption. Next part that you need to understand is how you can invest in the property. Now remember, whatever the sale of gold has taken place, everything, the total amount of the sale should be invested in the property. And this property is none other than residential property. You can't put the amount that has been received from sales into commercial property. That will not be eligible. So it is necessary that you are either an individual or HUF, and you're holding the gold for more than 2 years, and then you have sold it. And third important thing is, whatever the sale proceeds, whatever entire value of gold that you have sold, not the profit. Okay, this entire amount should be invested in the residential property. How you have to invest? It is the purchase of the property within 2 years of the sales, or 1 year prior to the sale. Okay, so if you are selling gold in 25-26, but you have acquired a property in the financial year 24-25, then also you will be eligible for claiming the benefit. And construct, the second option of course is construct the property. If you are planning to construct a property, a residential house, you already have a land and now you want to construct, so that is also possible. And this has to be done within a time frame of how many years? 3 years. Okay, so if you have to purchase, it has to be done within 2 years. If you have to build or construct the house, it has to be done within 3 years. Now let's take an example. If you have purchased gold, right, and 3 years back it was purchased for, let's say, 1 lakh rupees, and you sold the gold now, and this sale has taken place at the amount, or the value that you received is 2,50,000. So you have received the amount of 2,50,000. Then the long-term capital gain will be 2,50,000 minus 1 lakh, which means 1,50,000 will be your capital gain, and the tax on this 1,50,000 will be 12.5%, which comes to 18,750. This is what you need to pay. Now, if 2,50,000 is invested entirely, see, look at the figure. It is total value of the sale proceeds, not the gain, right? So here you have to invest how much? 2,50,000 of the sales value of gold entirely in residential property. Then no taxes need to be paid. Now, what happens if I don't want to invest the entire amount. I just want to invest some part of it, and some part I want to use it somewhere else. So I need liquidity. So in that case, even partial investment into the property is okay. That is fine. But only partial exemption can be claimed. Now, how much can you claim as partial exemption? Let's see the formula. Exemption will be equal to the amount that is invested, total amount that is invested in the property, divided by the net sales value of that gold, whatever the gold you have bought, sold. That amount, net value of sales of the gold, will be taken into consideration, and this value will be multiplied by the capital gains. Okay, so see the example now. If you have gold purchases of 5 lakh rupees, you sold this gold at 35 lakh rupees, capital gain comes to 30 lakh rupees. Okay, and you invested only 25 lakhs. You don't want to invest in property more than 25 lakhs. So in that case, what you should be looking at? Exemption. How much exemption can you claim? You can't claim entire value as exempted, but you will need to claim it with the formula. The formula says the amount invested. How much is the amount invested? Amount invested is 25 lakhs. So that you take divided by the entire net sale proceeds of the gold, which is 35 lakhs, whatever you get, entire amount multiplied by 30 lakhs. So it comes to 21 lakhs 42,857. This will be your exemption. Now, what is the limit of such exemption? The government said, okay, if you want to claim the exemption, we will set a limit. Some person may say, okay, I got this money from gold sales, and they may declare 100 crores, 500 crores sale of golds, purchase of property, whatever. So that is not allowed. How much is the limit? Let's see. It is the maximum deduction that is capped in a year is 10 crore rupees. Okay, 1 year, 10 crore maximum. And if you have any unutilized funds, so if you say, okay, I want to invest it in the property, but you still have time, like 2 years duration is there, 3 years duration is there, because you have decided to buy the property in the next 2 years, you have decided to construct the property in next 3 years, so you have a time frame, right? You still have limited time period. So what happens, so in that case you will have to actually keep this particular money in what we call as capital gains account scheme, which is basically CGAS, and this many of the nationalized banks will help you out with. So you can go to a nationalized bank, you may be having an account there, you can go them approach and ask them, I want to invest in CGAS, and they will guide you. And this is to be done within the time frame where you are going to file your return. So 25-26, the return filing date usually falls in July. So you will need to make the payment towards either the property, or you will have to invest the amount in CGAS prior to filing of your returns. Very important, whenever you have a high value transaction and you have done something in terms of capital gains, chances that you will have a scrutiny from the department's end are very high. So remember that you need to be very careful about the documentation. So what kind of documentation do you need to keep? First important thing, remember, you have to keep the details, the invoices of both the sale of gold and the purchase of gold which you had made earlier. And these should be proper invoices, not quotations, not estimate types. Okay, it should be a proper invoice. Second important thing is, if you have paid any brokerages where you're claiming that as expenditure in the sale proceeds, then this also needs to be kept. The statements, the account transfers that you have made towards brokerage, like RTGS you have made for brokerage, this has to be maintained. And third important thing is, when you are buying a property or residential property, obviously you need to keep the proper registered documents of this residential property. Now, another important thing here to remember is that if you're buying residential property, it should be bought in the name of the person who is planning to save the tax. So, like the father sold the gold and he buys the flat in the name of the daughter or his wife or his sister or his mother or whatever, not allowed. So the property should be in his name only. Maybe it is later on transferred by gift deed, some name is added, whatever the case is, that's not a problem. But valuation of that property to the extent of the entire gold sales should be in the name of the person who has actually sold the gold and is claiming for tax exemption. So hopefully these tax planning tips that I'm giving you here for the sale of gold can be used by you to understand the details about how you can save tax if you're planning to sell gold. Now, of course, there are many intricacies, and there are every case to case basis, there could be certain things which have to be taken into account and understood well before you actually go and invest, or before you actually go and take care of the tax planning. So always go forth and have a word with your financial advisor before you take any further decisions. So I've just given you broad tips here, and these definitely can be used by you in your tax planning. So hope you like this video. Do share it with the people who may find it useful. And if you like it, if you feel something you want to say about it, do put it in the comments. And if you've not yet joined Commerce Gyan, do subscribe to this channel. So hope to see you in the next video of Commerce Gyan. Thank you.